Entrepreneurs, sponsored by the Kauffman Foundation in Kansas City, Missouri. We're run by a pack of organizers. We're out on the camera, David, Brittany, Julian, myself, Ray White, who's off making the city of Virginia Beach a better place today. So, first of all, I'd like to start by asking if we have any announcements this week, things that are going on.
Well, Zucker Hopper did a wonderful job at the pitch contest yesterday. It was a great presentation. Unfortunately, he didn't win, but
it's okay.
But it was a great presentation, great turnout, and the next one coming up is January the 16th. So applications are due by December 27th. And as Rob was there, and then Brittany and David were there, you need to bring your A game on the presentation. Presentation quality has gone up quite a bit. So, you know, come to 1 Million Cups, practice here, and get ready for us.
Awesome. Any other events coming up?
December 5th. It's on your calendar. It's not on there.
Well, before December 5th, there is December 4th. Hot off the press, some of you guys might be on this email list, but First Look Challenge at Old Dominion University is the students they pitch their business ideas, and we need judges. And some of you have done this before, you know, so it's, I want to say 5:30 to 8, sometime like that. I haven't even gotten the email yet myself, but it's just mark it on your calendar, Monday night, December 4th at Old Dominion University, and we need dozens and dozens of judges. We're going to have, I don't know if it's 80 student groups. They're all freshmen. That's the key word, freshmen, you guys. So they haven't had the business classes. It's their first business class. They're coming up with an idea. It's rough. It's really rough, but but they're putting it together. They're working on it, and it's sponsored by Wells Fargo, and there's cash prizes for these students: $500 each student for first place, $300 for second, and $100 for each student in the group in third place. So it's a really cool event. We'd serve you guys dinner, and so mark it down. June. So what time is it? What day is it? December 4th, which is a Monday, so at Old Dominion University. And I appreciate your future volunteering. I'll get you more information on that.
Yeah, what I'm saying is, who do they contact?
I'm sorry?
Who do they contact?
You can certainly contact me, because I'll put you in charge.
Yeah, what I'm saying is you reach across, because you got Jerry, and you got Chris, and you got the whole game.
A lot of those guys are on my list already. I know Chris is, so I could get a sheet passed around if people want to give me your email address, and I can just send you the information. So.
Will it go out to the Million Cups list?
I don't know that we've sent that out before to the Cups list, but I suppose we could.
I'm at your crowd.
Yeah, it could be. I mean, I don't know if everybody who signs up on our mailing list is necessarily somebody who would evaluate pitches, but anyways, we'll figure it out. I don't want to promote things to people who are not asking for stuff, so that's kind of the way to start. But I forgot to ask if anyone's here for the first time. And we have a mailing list, as Charlie mentioned. So keep us in touch with what's coming up on future events, so you don't miss any of our great speakers. Yes.
Where is it? At Strong?
Yes. No. Web Center.
Oh,
Yeah. So you'll be able to park in the 49th Street garage. So it's over in the Web Center.
Still stay 1 minute late at the VIP parking lot.
Yeah, be careful about that. All right, so without further ado, we have somebody coming back who pitched, a year and a half ago, something like that, Mike Vernon with
Flood Insurance Hampton Roads.
Okay, I was thinking flood insurance, what's the name of it? But he's here to update us on what's happening in his business. I see your name in the news all the time, so I'm happy to hear what's coming up.
Thanks,
So
Karen.
give us your update.
Thanks, everybody. Pleasure to be back here again. I want to introduce Sean Little. Sean is our first employee other than myself. Sean got out of First Colonial, got a couple of associate degrees, and took some time off, and now he's back in school. He's getting ready to graduate with a degree in finance and a degree in business analytics. So I'm going to put those skills to use because they're the opposite skills of mine. But anyway, for y'all that don't know the backstory, I'm a business development strategist by trade, and 6 years ago, my consulting firm was active, and I was retained by a company that had invented and patented what's called certified engineered flood vents. When I started working for that client and doing research on how to help him grow his company, I came across what I thought was a sleeping giant. And I partnered with him in a way with 2 different companies, but we still do business together. And I started a company called Flood Mitigation Hampton Roads. And we were in business for about 2.5 years when I closed it down. 3 primary issues. There was very little consumer awareness. There was no money to spend on projects. And the industry was non-existent. I mean, completely non-existent. When I started it, there was no business model for me to follow. There was no books for me to read. The concept of figuring out why homes were not in compliance with today's flood code and then bringing them into compliance, no one had thought of. And so I started the business, and when I say it was, there was no industry, FEMA codes they conflicted with building codes. Everybody was working in silos. Nobody was comparing notes. Everybody was thinking at 50,000 feet. And when all these rules and regulations hit the ground, it didn't make any sense. An example was we had a house that was paying over $3,000 a year for flood insurance, and the remedy was flood vents. But it had a subgrade crawl space, and flood vents are not applicable with a subgrade crawl. That means the ground under the house is lower than the ground outside of the house. So the remedy was to put sand underneath the house, bring the grade up to the lowest adjacent grade next to the house. But if we did that, it would violate building code because the sand was too close to the bottom joist of the house. So we took the problem to the city of Norfolk's building inspectors, and we said, can we put in a humidifier? Can we add extra vents? Can we do something to offset this issue so we can mitigate the house? Because everybody wants it mitigated. FEMA does, the city does, the homeowner does, everybody wants it done. Well, the city of Norfolk sat on it for 3 months and then came back and said, we realize you don't need a building permit for this scope of work, so we don't have to answer your question. Okay? Now that was my world 6 years ago. It's come a long way, and the city of Norfolk has become very proactive, if not the most proactive city in Hampton Roads when it comes to flood-related issues. So I don't want to say that this is what it's still like, but like I said, nobody looked at this before. Nobody knew how to handle it. FEMA didn't know how to handle me. The cities didn't know how to handle it. So it's been a growing pain for all of us. But in a nutshell, our flood mitigation services are very unique. I cannot find another business model like mine in the United States, much less Hampton Roads. So I literally have no competition, which is a great place to be. Our services, we provide mitigation services for sellers, buyers, homeowners, and builders. As you'll see, this has a tremendous impact on real estate transactions. We process elevation certificates. If you don't know what those are, they're used to price flood insurance, and we work with survey firms. They're incredibly important. They're about tenths of inches. I showed Sean yesterday a situation where 1/10 of 1 foot was the difference between a $2,200 premium and an $1,100 premium. So very, very important. Mitigation design, what that is why is the house, if a home is paying $500 a year in flood insurance, then that home is compliant. The farther away from $500, the less compliant the house. So it's our job to determine why are they paying so much more, and how do we get them back there, and we design how that's to happen. Now I see people out there all the time putting in flood vents and things like that without doing an insurance analysis first, and they find out after they've spent $2,000 or $3,000 on a project that there was no premium relief. We do a complete insurance analysis on before and after so that we make sure that if they do a project, the rate of return on the investment is going to be worthwhile. We recommend products and services for them to mitigate. So for example, the #1 selling flood vent in the United States costs about $300 a pop. You need 10, that's $3 grand. Well, the flood vents that we use, the ones that my client invented and patented, which are equally compliant and equally accepted by FEMA, are $79 a piece. So we just saved that client $2,300 right there. We have construction partners that I've worked with and trained on the art of mitigation, and they go out and look at the properties. They come back with a proposal that is construction-based in conjunction with our design. They put together a proposal and email it to me. I look at that proposal for pricing, for FEMA compliance, and for them using the right products and services. And then if I agree with what they put together, I recommend it to my client. The client does the mitigation. We then get an updated elevation certificate to reflect the mitigation, which that's how FEMA makes sure that it was done per code. And they take that elevation certificate to their flood insurance agent. If it's not me, they have it have that updated immediately, and the client gets immediate relief on premium, and they get a prorated refund. Now, it's not uncommon for us to reduce flood insurance premiums by 80 to 90%. I mean, we've mitigated over 600 houses now over the last 6 years, and we had one just last month that was $6,000. It was a $5,000 project, and the flood insurance premiums came to $800. We had one where the flood insurance premiums were $4,400. We did a $2,500 project, and the premiums went to $450. And we have hundreds of examples of stories like that. So again, this part of our business is extremely unique. Now, the rest of it is ho-hum. We're a full-service insurance agency, and we offer typical insurance products and services. So I guess the important thing here is I don't want to service home, auto, and other insurances. So what I've done is I've set up a relationship with some of the best agencies in Hampton Roads, both what they call captive and independent agents. I get a client who needs home, auto, commercial. I grill them, or qualify them, if you will, and then I refer them to the agency that I think is going to do the best job of capturing the business. So for example, if they're a mile within water, the captive agencies aren't going to, the nationwide farmers aren't going to touch them, so I refer them to the independent agencies. If they capture the business, I get a one-time fee, and the agency gets a long-term client, and the client gets someone with a license to help them shop at no cost to them. The flood insurance we're building ourselves. We're building our own book of flood insurance. And right now our goal is to sell 300 policies a year. That's going to grow as we add more Sean's and go from there. So as I said, there is no mitigation for dummies. I mean, it was literally like looking in gray. I couldn't get answers to anything, but I knew there was a tremendous opportunity here. And so when I started, we had to learn FEMA code, we had to learn building code, and we had to learn insurance code. And we had to make those codes all dance together. And like I said, in the beginning, it was very, very difficult to do and very frustrating. I would say that 80 to 90% of the leads we generated, there was an issue that kept us from mitigating that particular property. Well, part of what kept us from mitigating the property was our own knowledge. We really pretty much sucked at it. Over the years, you know, we've gotten better and better and better, and I can honestly say now that I have confidence in saying that there is no house that cannot be mitigated. It doesn't make financial sense, does it make sense to the value of the property, and does it make sense on what it does to the quality of life in that particular structure. So our goal, the goal of Flood Insurance Hampton Roads, is to reduce the negative impact of flooding for both homes and businesses concerning both their property and finances through education, awareness, insurance, and mitigation. This is a tremendous problem in our community. As you'll see, FEMA is $24 billion in the hole. And by the way, it's actually the National Flood Insurance Program that's $24 billion in the hole, which is managed by FEMA, which is managed by the Department of Homeland Security. It's currently not going farther in the hole because Congress is managing the claims differently. This was mostly created by Katrina and Sandy. The claims now that are being managed are Congress is figuring out what to cut in order to pay the liabilities from the storms that hit this year. But they're desperately trying to keep this $24 billion from going up. So what are they doing? They're doing two things. They're raising premiums, and they're raising premiums quickly, and they're raising premiums substantially. They're also trying to lower exposure so that future storms cost less. And this is the crux of what my business does and why it's unique, okay? This is pennies in the bucket compared to this. But just so you know, if you have an investment property, a second home, a rental property, any kind of property that's not your primary residence, including commercial, the premiums are going to be going up 25% per year for the foreseeable future with no end in sight. Okay? I'd love to have an investment compounding at 25% per year, right? If you have an older home without a current elevation certificate, your premiums are going to be going up 18% per year until you get one, okay? So the whole concept of what FEMA is doing is they're wrenching people's financial arms up behind their back until they cry uncle and agree to mitigate their house, which makes it more flood resistant, which lowers exposure, which causes future storms to cost less. It's a very, very methodical, on purpose concept. And so as we move forward, there are people 6 years ago that laughed at me when I told them they had to fill their basement. Or they laughed at me when I told them they had to lift their house. Well, now I'm their best friend. Okay, and what you're going to see is you're going to see more and more structures being lifted and more basements being filled, more flood vents being installed, because the premiums now, that person that was paying $1,000 a year 6 years ago, they're now paying $6,000 a year, and they paid it $25,000, $30,000, $35,000 during that same time frame. But in a minute, I'm going to show you what flood insurance premiums do to the value of real estate. So, why mitigate? Safer communities, safer homes, saves lives, future storms cost less, quicker recovery times, lower flood insurance premiums. And this one right here, that right there is critical. If we get hit by a major storm, 68% of the small businesses in Hampton Roads will be out of business immediately. Another 24% will be out of business within 2 years. Quicker recovery times are significantly important. So flood talk. What gave me the idea that I could be successful doing what I'm doing in Hampton Roads? Well, first of all, there are over 70,000 properties required by law, and that's not saying want. That's required by law to have flood insurance. If you live in what's called a high-risk flood zone, what we call a required zone, and you have a federally backed mortgage, you are required by law to have flood insurance. Now, if you pay cash for the property, you pay off the mortgage, you can drop your flood insurance if you want to. Don't know that it's all that smart, but you can. So there's 70,000. Now, if I go up into the northern neck, which is getting up on the other side of Pocosin, where Gloucester, Matthews, Kilmarnock, all those areas, the number goes up to 100,000 very, very quickly and more. So, and we do quite a business. In fact, my office is in Virginia Beach, but I would say 60 to 70% of my clients are on the other side of the HRBT, okay? We also have one of the highest average premiums. Like I said, if you're compliant, it's $500. If you're not compliant, it could be significantly higher. And so when you look at all these properties, like in Largemont that have basements, basements may have been great 100 years ago. They're not real smart right now. They don't match with flood insurance very well. And there is no competitive market. The National Flood Insurance Program offers 99% of the flood insurance that's sold in this country. The private sector is now starting to want back into business because the premiums have gotten high enough for them to realize profit. But and right now that legislation is being changed to allow them back into the business. But there's going to be issues and concerns. As we all know, first iteration financial products rarely work the way they're intended until there's several iterations of that product to fix the issues. So there is no competitive marketplace. That means if you went to a Nationwide agent, an Allstate agent, a USA agent, and gave them the same exact criteria for flood insurance, you should get back the exact same quote. Doesn't always happen because agents are agents and they make mistakes. There's a tremendous amount of incompetence in this whole thing because it's so new, not because of bad people. But I guarantee you I make 50% of my money fixing mistakes that insurance agents, real estate agents, survey firms, and everybody makes. It's constant and ongoing. Increasing flood insurance premiums are affecting real estate transactions. I would say about 80 to 90% of the homes that I've mitigated were in the midst of being bought and sold. Flood policies can ruin deals due to debt to income. Debt to income is ratios that mortgage bankers use, right, to qualify their clients for mortgages. and flood insurance counts against that debt to income ratio. One of the things I'm constantly warning real estate agents is, if you're selling someone a home in a required flood zone and they're bumping up against their debt to income issues, walk them away from that house, because most of the time flood insurance is going to go up a lot faster than their income, and in 2 or 3 years they're going to be hating you and telling everybody they hate you. So don't walk them into that trap. Flood insurance is causing foreclosures on a regular basis. Older people living on fixed incomes, lots of issues that are very, very critical. The National Association of Realtors, this is absolutely astounding. The National Association of Realtors commissioned a nonprofit out of New York City called LAND. LAND does financial crisis or financial studies on natural disasters. NAR wanted to know, what is the impact of flood insurance premiums on the value of real estate? And LAN came back and said that for every $500 you spend on flood insurance, it decreases the value of the property by $10,000. So you have people out there that have $3,000, $4,000, $5,000, $6,000 flood insurance policies. They're experiencing $30,000, $40,000, $60,000, $80,000 of lost value. Now, the one that I mentioned earlier that was $6,000, we got to $800. It was in Larchmont, $300,000 house. They put it on the market. 18 months later, they dropped the price to $180, which was what was owed on it, and they still couldn't sell it. Because with these large flood insurance policies, it opens up Pandora's box. Not only is the policy a legitimate objection, but it's how many times have you flooded? Do you have crawl space damage? Am I safe here? Why shouldn't I spend the same money and buy more house? And so what happens is they start dropping price, and at $180, they couldn't sell it. We did the $5,000 project, got the premiums to $800. $800 is considered a competitive premium in Larchmont, and it sold for $280 2 weeks later. So they spent $5 grand and made $95,000. So, because we're unique, and this is one of the benefits I did not realize I was going to receive, we've been featured in the Washington Post, New York Times, Bloomberg View. A lot of the journalists who have done stories on my company are freelance. I mean, I even found when I was Googling it that we've been in the Portland Herald. CNN came into town a couple weeks ago and did a story that's going to air next month. So because we are very unique and the problem is becoming more and more significant and having more and more impact on cities, we're getting a lot of free press. And that has become one of my marketing cornerstones, is working hard at getting more and more free press. They did a story in the Virginia Pilot. We were featured on the Sunday morning front page of the business section, and it led to a record-shattering September for my company. So we've gotten pretty good at getting more and more free press. Also, I do a lot of public speaking, talking about my marketing efforts. I forgot Sean got me, I spoke at the Old Dominion Entrepreneurial Center just not too long ago. But I've spoken at the Virginia Coastal Policy Clinic at William & Mary Law School, the 127th Virginia Bar Association. Williams & Mullen retained me to teach at their Richmond Risk Management. I've been to Million Cups a number of times, and I've taught CE classes to over 4,000 real estate agents. So when I walk into a real estate firm in this town, they don't remember my name, but they go, "You're the real estate guy," or "You're the flood insurance guy." And that's very common. The local paper called me the flood fixer. So we're getting ready to launch a major internet campaign. I've owned numerous domains that we're going to build websites for each of those domains. I've hired someone who is trained by Google to do the search engine optimization, and we're scheduled to have all this in order. Right now my websites are a mess, but we're scheduled to have it all cleaned up and ready to go by January 1st. Direct mail, I can lay postal codes over flood zones and tell exactly who is in those flood zones or exactly where those people are located. And so we can very quickly put a direct mail piece together. We can have case studies that we've done, links to the articles. When I can say that we've been in the New York Times and it's on a direct mail piece, it brings tremendous credibility. We've already been experimenting with it, and having the links to the articles drives more contacts than direct mail pieces without the links to the article. Obviously, we'll have a propositional benefit and a call to action on those pieces. But this is what I deal with on an ongoing basis: frustration, fear, foreclosure. And it happens in that order, and it happens quite a bit. And it feels really good to be able to do something that has such a critical impact on someone's life. Mrs. Key up in Yorktown was a recent widower. They had a $400,000 house. Her only child and her family got transferred to Texas. They went down to Texas to work. They built a house with a mother-in-law suite, and the plan was for Mrs. Key to sell her house rather quickly. Beautiful neighborhood, beautiful area, and then come down there and give the kids back some of the money that they used to build the mother-in-law suite from the sale of her house, and live happily ever after with her grandbabies, as she called them. So when I met her, the house had been on the market for 18 months. Her family had been gone for almost 20 months. She was furious one minute, she was depressed another, because what she found out was that they managed their money the old way, which the man managed the money, and she didn't know when she put the house on the market that $400 a month of her mortgage was going to FEMA. And so when they put the house on the market with a $4,400 flood insurance premium, it wouldn't sell. And so we were introduced to her by a real estate agent. We did a $2,500 project, and her flood insurance premiums went to $440, and she sold the house. It was real. I drove all the way over there to tell her in person, and she all she could do is jump up and down and scream that she was going to be with her grandbabies. So really, really impactful stuff. One of the things that's happening as these premiums get huge, the desire to get rid of those premiums is getting greater and greater. The bottom line is the premiums are now so substantial they can actually finance six-figure projects like lifting a house. And you're going to see this more and more. There's a street in Pocosin in which 9 of the homeowners got together and put together a request for proposal from people who could lift houses, and they signed a contract and all 9 houses are being lifted. Lifting a house is a $150,000 to $200,000 project, because once the scope of work is worth 50% of the value of the structure, the entire structure has to be made compliant, which means its lowest first enclosed floor and all mechanical has to be 3 feet above what's called the base flood elevation. That's why you see some of these houses that are literally 14, 15 feet up in the air. So this is going to become a big business, and what I've done is I've created a team of architects, engineers, environmentalists, general contractors, product providers, and I can now take someone who wants to lift their house, which is a very intimidating, very large scope project, and we can walk them through it from beginning to end. We can get them financed, we can get the designs, we can get everything done. And what happens is their premiums go from $7,000 or $8,000 a year. I'm working on one right now that the premium's $8,700 a year. And the premiums that go to $450 once they're compliant, and the person is going to roll the cost of the project into the 30-year mortgage, and their monthly layout or payout or cash flow will be less than what it was before they lifted the house. But the $8,000 is going to go into making the house more valuable, because you have to remember, this person who's paying almost $9,000 has lost $180,000 in market value of the property. So as you go up 25%, you're losing 20, 30 grand a year every renewal on your structure. So as you lift that structure, you're getting that market value back, and you're now investing into your property instead of sending the money to FEMA, and 5 years from now having the same problem you have now, except you're spending a lot more money. So some of the things, what's the potential? This is going to be a huge economic boon to Hampton Roads. Wetlands Watch out of Old Dominion University did a research project, and they determined that there's $438 million of residential real estate needed, residential real estate mitigation needed immediately. They also said that if people wait on FEMA money and FEMA keeps doling money out at the same rate they are now, the last person in line will get their money in 188 years, okay? I can put together a logical and financial argument that you're better off using your own money than trying to get 1 penny from FEMA. Wetlands Watch says that the work would employ over 10,000 construction workers in the field and begin to employ engineers, architects, and mid-level managers. The economic development people in Hampton Roads are looking at mitigation as one of the 5 or 6 drivers in booming our economy going forward. And I just want to say that this coastal Virginia, we have to make sure that people outside this area know how important of an issue this is, because we are vital to the rest of the state and the East Coast. When you bring our port into play, when you bring in tourism, our educational universities, all these things come into play, we can't get left behind like we did on transportation. We need to stay in front of this and make sure the rest of the state is working with us to solve these issues. And these are multi-billion-dollar issues. It's not going to be one city that's going to be able to take care of it by themselves. It's going to be regional, and I think it's one of those things that might have the potential to actually bring us together. And so pretty soon I'm going to write the book. Thank y'all very much. Yes, sir.
What's a flood vent?
A flood vent, they're called, the ones that are applicable are certified engineered flood vents. And the certification means the vent has been engineered to be able to handle a certain volume of water.
What's it do?
What it does, when you have a rising water flood, underneath the structure, whether it's a basement or a crawl space, it builds up what's called hydrostatic pressure. Have you ever pumped a spray bottle, and the more you pump it, the harder it gets to pump? That's hydrostatic pressure that's building up in the bottom. And so if you pump one time too many, it blows the top off the container. Well, when that hydrostatic pressure builds up underneath the house, it will literally lift the house off the foundation and cause walls to start to crumble. So you go back to what I said about FEMA wanting future storms to cost less. By managing that water flow, it manages the hydrostatic pressure. Your floors are still going to get wet, your walls are still going to get wet, but it's going to prevent structural damage, which means FEMA might write a check, just making up a number, for $35,000 instead of $350,000.
I mean, is that for a slab or cost?
No, the only way to mitigate a slab is to either lift it, to demolish it and start over, or to build a second floor and turn the first floor into garage and non-living space. And so any kind of mitigation for a slab is a 6-figure project. And I also tell real estate agents in my classes that if you have a slab that's under the base flood elevation, it has no happy future, okay? Don't sell anybody that house if you're representing them, because it does not have a happy future. When you go back to Matthew last year, about 90% of the houses that suffered significant damage were all on slabs.
Okay, you said flood vent a few times in the presentation. I still don't know what a flood vent is.
A flood vent manages the water flow better. There's a lot of code to flood vents. You can't have a subgrade crawl space.
No,
You have to have
what does it do? What does it
releases
do?
it
What's
manages
it
the
look
water.
like? How big is it? Show me
Well,
the
they can be
green.
different sizes.
It's a foundation
But
vent,
they
right?
manage the water flow underneath the structure.
What does that mean?
Yeah.
It mean,
It allows water to pass through.
if you have a subgrade crawl space or a crawl space that is not prepared correctly, and you have vents that aren't letting the water in and out properly from the structure, it builds up the hydrostatic pressure. So for example, a normal flood vent can only manage a little bit of water, okay, the way it's engineered. So an engineered flood vent, for example, can manage 200 inches of water. It's a technical engineering term, okay?
Are these the little
It's-
square things you see in your house?
What's it look like?
Correct. Well, if you Google it, you will find out very quickly. Actually, you have it in your house probably. So just
You can have them
hard
look
to
like
explain.
normal vents, except they're engineered and certified. And you have 8x16s, you have 16x32s. You have crawl space doors that are flood vents.
So the idea is that as the water comes up, the pressure builds, and these vents release the pressure of the air at first, and then the water, and if you don't have enough of them,
Correct.
they can't do it fast enough.
You have to have 1 square inch of flood vent for 1 square foot of crawl space. They have to be put on adjacent walls, and there's methods for where they're placed and how they're placed. They have to be within 12 inches of grade.
Yeah, yeah.
And so all these other codes, but the point is that if you do them right, the water flows much more evenly and doesn't build up against certain, I mean, for example, if you had a subgrade crawl in one corner, the water would go to that corner and build up the most pressure there. And so by installing the vents per code, you're gonna alleviate that corner from being able to gather water, and you're gonna have the flood vents placed so the water can get back out and flow evenly and not be improperly distributed.
So where does the water go? It just goes into the groundwater? Or-
No, it just flows more evenly, okay? It doesn't allow water to get trapped underneath the structure in various places. Yeah, and do that,
So it
yes.
knocks the building. I'll try to help, and then I have a question. So, to give an extreme example, when the tsunami hit in 2004 in Banda Aceh, Sumatra, I happened to be over there. Anything that had solid walls was flattened. The mosques were all standing because they were arches and the water was able to flow through cleanly. So it didn't build up pressure and knock down the walls. The thing was standing, it just flowed right through. So the flood vent is designed to let the water go ahead and flow through your crawl space to keep from pushing down your walls. Now, my question is, from a business model standpoint, you changed from flood mitigation Hampton Roads to flood insurance Hampton Roads. Does more of your business focus on the insurance side? It doesn't sound like it. Or are you more focused on the mitigation side? And if so, why did you change to the insurance name?
Well, first of all, I was leaving money on the table, okay, from that standpoint. Second of all, from a logistical standpoint, I couldn't do the insurance analysis. Okay, I was having to go to insurance agents who were friends of mine and say, hey, will you do this number for me? You know, do this as if the property's already mitigated. And so it allowed me to do the insurance analysis, which is a critical portion, because once I can show people that they're going to save $4,000 or $5,000 a year, $1,800 a year, it becomes a no-brainer as far as justifying the outlay.
So do you see yourself as an insurance company that does mitigation or a mitigation company that sells insurance?
I market myself as an insurance company that does mitigation. But for me personally, because the mitigation is such a unique,
It's a differentiator, sure.
it's a differentiator.
Yeah, it seems like you should be, the mitigator and the insurance is just another profit center. I mean, it's
Yes.
more exciting seeing what you're doing and all the things that you do, and then
Right.
insurance just happens to be one of them.
Right. But the insurance brings in significant revenue every month. So it's very lucrative because of the way I do it. And I don't have any service connected to the insurance other than the flood, which there's virtually no service for flood insurance. I mean, nobody ever calls about it as part of their mortgage, they don't even think about it. But the home and auto is very service intensive, and I don't have the expense that comes with managing that. I don't have the renewals from it, but I don't have the expenses.
You just
either.
get referral fees basically from
Yeah, I get a one-time referral fee.
If you were flood insurance reduction Hampton Roads, or, I mean, I see a lot of stuff that you're doing that reduces people's flood insurance,
Right.
which is sexy, but I don't see it in the name, you know what I'm saying?
Well, it's a product of flood insurance. I'm just one of the very few people that try to reduce it.
I would
I mean-
guess that the real issue is that 100,000 people, about 95,000 people would never go look up in mitigation anything.
Oh, you-
But they'll look up insurance.
Yes, and they'll look up, like one of my domains is lower my flood insurance premiums,
Yeah,
et
that's
cetera.
right there.
So the bottom line is that more and more people are now proactively looking at solutions and remedies to their problems. And it's about positioning myself with that.
So-
He's had his hand up for a while.
I was working with the assistant city manager yesterday, all day until about 9:30 last night. And one of the things we're looking at for Virginia Beach and this whole area here is to declare it a New Orleans and build up flood zone protection areas all the way around. And they're also going to be putting in big pump stations just like New Orleans has.
Mhm.
So if we do have another flooding type possible situation, they'll be able to pump this stuff back out into the ocean.
Right.
Right now, if you look at all the water in this whole area here goes into Lake Trashmore, goes into Lake Windsor. From there, it goes under 264 out to the Thalia River.
Right.
Problem is, getting that much water out through underneath the freeway, out to Thalia River is not working, and there's some other problems going on with the same thing. But all these, there was over 4,000 houses damaged in the flood last year.
Right.
And right now, according to insurance and real estate people, there's over 300 houses still right now abandoned.
Right.
But what we're looking at is encompassing the whole area and making it a flood-free zone. And the problem is, Virginia Beach is sinking and the sea level water is coming up. There's no way of preventing that.
Well, the big problem with the concept of trying to get more water into the tributaries is that very often the tributaries are pushing in.
They're maxed out also.
Yeah, the perfect storm, for example, in Larchmont is full moon, high tide, northeastern winds, and torrential rain. And the reason why is the bay and the Elizabeth River are being pushed up into the drainage systems, and there's nowhere for the rain to go. So if you've ever been in Ghent and caught at one of those times, you literally can watch the water rise a foot in a matter of minutes.
Right now,
So
Lake
there,
Windsor's maxed out.
yeah, as I talked about, there's going to be tremendous, yeah, there's going to be tremendous opportunities. For example, the Hampton University and Old architectural people and Old Dominion's engineering school got together on a project called Chesterfield Heights. Chesterfield Heights is an impoverished historical preservation area that floods very, very badly. And they got together and created some really neat stuff, including a water retaining bin underground in which the water ran into the bin, holding billions of gallons of water until the water in the rivers receded and then released into the river. That project won the city of Norfolk $120 million for more research.
Two parts for you. Have you talked to the bank? So like Town Bank, every time they do a mortgage refinance, it might be cheaper to have you come in, escrow the money, and it would lower the payments.
Well,
To me, that would migrate a lot of their risk, because if people, I mean, if you don't owe anything on your house and your house floods, you might as well walk from it.
yeah, when I talk to people about, I believe that everybody in Hampton Roads should have a flood insurance policy, because if we'd been hit by Harvey, it would have been almost identical to what happened in Houston, in which 90% of the damage was outside the required flood zones. So my question when it comes to flood insurance is, you know, if you're in a voluntary zone, it's going to be $500 a year. So if you made $500 less next year, is that going to change your life? If you lost your house, would it change your life? So the bottom line is, I've been talking, I have a financial background and I understand the way the banking industry works. Those smaller banks like Town and Atlantic Bay, Movement, they don't have any risk because they sell the paper within a week. The big Wells Fargo is a huge buyer of that paper, and they claim to own 51% of the mortgages in Hampton Roads. And for example, when I talked at the Risk Management Association, I brought up some of those same things. I mean, how much risk is Wells Fargo having in Hampton Roads? And what if they offered low interest loans to those good paying customers for mitigation in order to protect their paper? So there's a lot of stuff like that that's starting to be conversations.
Second part of that, if this is that big a market, obviously Houston, Miami, New York, anywhere on the East Coast, if the sea levels are rising, then this would work everywhere.
Yes.
Why aren't you bringing in people, having them intern for 3 months, and then sending them back out there, and you own a piece of the action in every market if you have all this? Why are you just doing Hampton Roads?
Well, first of all, I had to learn, go through the learning process and getting it right. For the last year, we've got it right. We now know what we're doing. We know exactly what business model works. We know what numbers to look for, et cetera. So now we're trying to duplicate, and what I've done, as I said, Sean's got a finance degree and a business analytics degree. I'm bringing in another intern from Old Dominion that has similar educational skills, and we're about to go to work on where's the next geographic area to expand to. We know that we need older homes. We know that we need certain income levels. We know we need X amount of homes required by law to have flood. Those kinds of things we're starting to assimilate. And my gut tells me where the next geographic area is either going to be Baltimore or Wilmington, Myrtle Beach. I want it to be within driving distance.
But why don't you, but if you brought in partners from every area, you could expand that much quicker. You're like doing your knowledge and you passing on your knowledge to them, and you're basically giving them, you're not doing a franchise model, because that will get you in trouble, but you're taking a piece of the action, a quarter of it or whatever. They're putting up all the money and you're expanding much faster.
Well, the expansion is relatively inexpensive because what's gonna happen is there's gonna be a corporate office here, and when the local number down there is dialed, it's gonna ring in Virginia Beach.
Yeah.
And the websites and the direct mail are gonna drive the leads, and we're gonna have a partnership with a construction firm and a survey firm in those geographic areas, but we will not have to have people located in those territories.
Gotcha.
One of the things we went over yesterday was risk factor, and if we had a storm like they had up in New York, New Jersey there, Virginia Beach would be under 13 feet of water.
Yeah, yeah. If you look at what's going on, I mean, the weather patterns are changing. Okay, Irma was a Cat 5 longer than any hurricane in history. Harvey dropped more rain than any hurricane in history. Sandy is the only hurricane to hit Cat 3 to hit north of the Mason-Dixon line. The Gulf Stream is slowing down. That's pushing water on top of us. All of Hampton Roads is sinking. I mean, I found out the other day that Poquoson is an Indian word that means great marsh. Okay? I mean, downtown Norfolk is built on marshland. So when we look at all this, it's going to be a huge driving force from an economic factor because of we're not very good at giving land away. We're not very good at backing off, and I don't think we will here. I think that, for example, that model that I put together to raise houses, to walk people through it, I'm not going after FEMA money. FEMA is a bureaucratic mess. Not only that, when you use FEMA money, you can't use a dime of it to improve the house. You can only use it to lift. That's why you see some of these butt-ugly houses in Larchmont that are on cinder blocks 15 feet up in the air. But if you use your own money, you can put in storm-proof windows, you can remodel the kitchen, you can do whatever you want. You can make it aesthetically pleasing, you can hire architectural landscapers, you can do whatever you want. And I think there's a lot of people who are affluent who have houses that they've had in 3 generations, or they're tired of being afraid they're going to flood every time there's a storm coming up the coast. They're going to start doing things to make their house more flood resistant. They're going to start buying natural gas generators that are connected to sump pumps, that are in bins. You know, a lot of people are starting to do a lot of things that have nothing to do with flood insurance.
Virginia Beach had a lift program, but they finally decided it was not economically feasible because the houses they were lifting weren't worth the cost of lifting them.
Well, not only that, they're liable for any issues that occurred. For example, several of the houses that they lifted are having settling issues, and they're about to be victims of a class action lawsuit. There's a clause in the code with FEMA that says that if the cities participate in that program, then they are the general contractors. And the city of Virginia Beach, along with other municipalities, are trying to get that legislation in FEMA code changed so that they can actually have a general contractor. But more and more municipalities are pulling out of the program because there is only one person, one company, bidding on all the projects in Virginia, and he is gouging significantly. He's charging over $300,000 to lift a little ranch house. And so the cities are saying, I've had enough. The International Association of Structural Movers says that with the number of entities and a number of corporations in Hampton Roads that can lift houses, in conjunction with the number of houses that need lifting, it's going to take 350 years to lift those houses. So obviously what's happened and what's happening right now is lifting a house is very expensive because there's not enough competition. But I believe when the premiums get to a certain point that it's demanding more lifts, you're going to see the entities that were in New Orleans, that were in New Jersey, you're going to see more and more people. The other thing that's happened with those companies is that they require special equipment. And in the race to lift all these houses that were damaged between Katrina and Sandy, people were just buying these equipment and sticking anybody in the cab to run it, and people were getting killed. So now there's laws about how you have to what you need to buy these things, what kind of training you have to be in them, all that kind of stuff. So that's limiting the competition factor right now, but I think that's going to change as more and more people get qualified.
I mean, you did a lot of research on this, so I don't think that lifting every house in the East Coast is possible, and the South.
Well, it's not needed either.
I mean, most, like the map that you showed is almost east of Virginia has to be in a danger, basically. So instead of that, why don't they like raise the sandbars or build a wall? You know, like the boardwalk in Virginia Beach is actually is a seawall that prevents the hotels to go in. Like
Well,
maybe
there's
basically you raise it 4 feet higher.
Yeah.
Yes, it costs some money initially, but it will prevent anything in the whole area.
First of all, when I have people moving to the area and they start reading all the articles about flooding and things like that, I tell them, if you don't live in a required flood zone in Hampton Roads, you live right next to one. So it's all about the structure. It's all about height, and that's what you need. Don't buy houses on slabs. It's all about the structure. The other thing is don't build up, build down. I mean, don't build down, build up. One of the most common factors of increased flood insurance premiums by thousands of dollars per year is when someone converts a garage into a den. And now we have living space on a slab 3 feet lower than what they were priced for before. Another common one is the building a sunroom on a slab. Okay, you walk out the back, you go down 3 steps, and now you have a sunroom, and that's now attached to the house as part of the issue. But going back to what you said, there are things happening. So for example, did everybody hear about the sand dunes encroaching on the houses in Ocean View? But they weren't allowed to touch the sand dunes because they were protected by FEMA. FEMA is a land management program, huge land management program. So what happened is FEMA, the Army Corps of Engineers, the City of Norfolk, Old Dominion University, the Ocean View communities, they got together and they figured out a solution, and basically the sand dunes were moved way, way back, and then there was sand replenishment that was done that made the beaches much bigger, and the next thing you know, 1,000 properties that were required to have flood insurance are no longer required to have flood insurance. And so as you start doing, there needs to be billions of dollars of that, whether it be seawalls or moving sand dunes or whatever it may be, but that's what's going to start happening. It's going to be federal money, it's going to be state money, it's big money. But that's what's going to start happening in Hampton Roads over the next 50 years. The problem is we're already 50 years behind. We should have been doing this 50 years ago instead of arguing on whether it was happening or not.
So I've seen and read some studies, like the Dutch with their seawall, how they've done things over the hundreds of years. And then the VIMS folks around here all do these studies that talk about the fact that you really can't do the build the wall trick around here. Just look at the topology of our area with the rivers and byways and all that kind of stuff. So in your business, my assumption is you decided that sort of issue will never impact your business until you're like 3 generations down the road or something, right?
Basically, yeah. My business has 2 weaknesses. One, I'm dependent upon FEMA code, which I don't like being dependent upon government code, because you never know what they're going to do with it. So I'm doing some things to diversify from that. The other weakness is I'm too dependent upon the real estate market. So when the real estate market slows down, my business slows down. And I'm doing some things to get to the direct homeowners that are not in the market of buying and selling houses, et cetera. But part of the way I'm trying to diversify my business is to get to those people who want to make changes that are not in relation to flood insurance. That's how I get away from FEMA code. So I have the rich doctor who wants to put in natural gas generators and sump pumps, and I get paid by the construction companies that I refer business to. I get a commission. So part of me doing all the marketing and paying for the brochures and paying for the search engine optimization is to drive leads to me that I'm then going to deliver to my service providers, who will then in turn pay me a fee for doing that. So that's one of the ways I'm diversifying away from FEMA code.
How do you get most of your clients right now?
Right now it's from real estate agents. I mean, real estate agents are probably about 90%, but it's been, well, not anymore. It's probably about 80% now because of all the free press. The free press. I got a call from California when the New York Times article hit. I got a call from a lady in California who, there was a peninsula that went out into the San Francisco Bay that was only wide enough for a 2-lane road. And all the houses on that peninsula were built on cement piers out over the water. And she couldn't understand why she was paying so much for flood insurance.
Where are you looking now to get your customers, besides the real estate people?
I'm starting to do more and more of the, I think, I get a few leads from the internet, but not near what I think are being searched. I mean, when I look at what the searches are, I'm not capturing enough of those. So that's the next biggest drive. I have a plan in place from a marketing standpoint on several fronts, but it's designed to kick off the first week in January. And I'm hoping within 90 to 120 days that I'll be placed. I'm already, if you Google like flood mitigation Hampton Roads, I'm already #1, but I'm not getting enough leads from it. That website needs to be cleaned up. I still own flood insurance Hampton Roads, flood mitigation Hampton Roads, and it doesn't generate income, but I still own it. And so that's going to be the next big drive, is to do the search engine and figure out what works, so that when I open up the next geographic area, I can build the same kind of website with the same search engine optimization formulas.
So what can we bring Cubs do for you, Mike?
Like flood insurance. No, I think we're good to go. We're growing. We've got good cash flow. We've got some good ideas, bringing in some youth, keep me feeling young. Especially when I need to do something on the computer. Sean! So,
We have a cup of coffee for you.
all
Fill it
right.
up before you take off. And
Thank you.
Before you go, I have an announcement. We have a special guest here today. Our own Sandy Travis has written a book about her journey in overcoming cancer. It is awesome. I've read it. We need to give this to anybody who's an overcomer or who wants to just win in life. It's not just for cancer survivors or people that are doing that kind of thing. It's just really to the point and very interesting.
Well, thank you.
It's hot off the press.
Karen wrote me an endorsement under a really tight timeline, so I wanted to bring her
Yes.
actual physical copy
It's
today.
awesome.
She read the digital.
I read it, and so now I get to see it in real life. But there are little snippets, each chapter, look at it, it's like 2 little pages, so it's really easy to read. And it's just great stuff about her life and how it all encompasses into, I don't know, you just have to read it. It's great.
Thank you, Karen. I was on it.
I know.